Hi traders, this is Chris from Elite Currency with a new video on the euro dollar and pound dollar. So let's start with the euro dollar 4-hour chart, and we are getting a bigger correction to the downside. As expected, we had this fib on the chart because we thought that the bullish swing was over and that price would retrace back to these Fibonacci retracement levels. And you can see that price now is approaching the 38 and 50 fib zones for what I think is a wave B. By the way, regarding waves and fibs, we have a great guide free of charge that's just been released on our website. You can see the link here. I'll paste the link at the bottom in the description so you can easily link to it. But it's really a great guide because it shows you all the wave patterns and how they relate to the Fibonacci relationships. So I definitely recommend taking a look. It's not only text, but great images as well. So take a look at that after this video. Now back to this euro dollar 4-hour chart. You can see that price is breaking through this little flag we had here, this bear flag. On the hourly chart you can see it a little bit better. And I think that this is a wave B. I think this is a zigzag pattern for more downside. I think the main target of this downside is the 50 or 61.8 fib at around 114.70ish or 115.20ish. As you can see, we have the round level of 115 in between, which is a key psychological level, of course, as well, and that could provide the support and bounce back to the upside. So this is what I'm expecting at this moment. I think that this is the path of least resistance, is a bullish wave A, a bearish wave B, and then again a bullish wave C. So like this, A, B, C. Now within that wave B, if we zoom back to the hourly chart, we had correction, right? That was one correction. Then we had another correction, and I think we're getting a three-wave correction again. So that's why I talked about this being a bearish ABC right here within the bullish ABC, and that's exactly what happened. Price last hour broke below this bear flag and bounced off the 21 EMA. As you know, we really like using the moving averages because it's basically a shortcut. Rather than trading the waves, you're trading the moving averages, which is basically the same but easier. So, and I think this bearish ABC will go down to these targets. Now, in the long run, I think that this ABC here will head back to support because we have, as I already mentioned last time, a potential inverted head and shoulders right there, indicated by those blue circles, and roughly around that 50 fib is that shoulder level. So that could be a bouncing spot for a wave C to the upside, which I think will be aiming at the -272 target at 118.50 or the -61.8 target at the 120 round and psychological resistance level right here. All right, that could be the main target. And in that case, we'll have an ABC like this, and that could complete a wave B. This was a 5-wave down for wave A, and down it goes for wave C. Now it doesn't have to be that simple. Sometimes corrections get expanded. So I think that more likely that this will be ABC for a W. We get another ABC down, and then we get one more ABC up, and then we finally finish the waves B. Because sometimes these corrections are complex, or quite often in fact. So, and you know, from this point of view, it would not be strange if we get a larger correction that expands further in time, this upside kind of correction before we get a downside trend. It doesn't have to be though. It could just be a simple ABC and the trend starts. It all depends on how fast price moves once it gets into these fib targets. All right, now what if this is not true? Well, basically, if price breaks through this bottom, then that bigger ABC is not likely. Or is invalidated, sorry. If it breaks through the 61.8 fib, then it's still possible, but a little bit less likely. It's 50-50 in that case, probably, depending on how fast this price action is moving to the downside. All right, so below 114.70, ABC is still possible, but less likely. Below 113, and that's invalidated. That's the invalidation level for this bullish ABC pattern. It also depends on how the patterns we see here. Does it break below the 21 EMA on the daily chart? I don't expect it to break because it's so close to the 50 fib. I believe it will touch the 50 fib, hit it, bounce back up, and we'll have a wick on the daily chart. So looking at the candlestick patterns, of course, will help make that judgment whether we're getting a bounce or break below or at 115, right? Break below it or bounce at 115. Let's move over to the pound. Pound dollar is breaking to the downside. I already indicated that this to me looks more bearish than the euro dollar, and that's because we completed here an ABC pattern, and ultimately that is still possible that it's part of wave 4. Price did not invalidate that particular pattern, so it's still possible. So if that's a wave 4 completed, then this downside could be a wave 5. And if we zoom into the hourly chart, it looks like we finished a 1, 2, 3, 4, 5. There could be an ABC pattern here, bouncing at the weekly S1, going back maybe to the weekly pivot point, where a bounce could occur for the start of a wave 3, for instance. So I wouldn't be surprised to see an ABC to the upside soon or now. Doesn't have to be though, because it could be that this wave 1, 2, and this is a 3 that continues lower. So if it does break below the weekly S1, then it could fall right away down to the S2. It's possible too. It's a bounce or break spot, basically. So I think probably could be good to keep an eye on the 4-hour candle and see how it responds to the S1. Did it close below it? Did it break below it? Is there a wick? That will give us some info whether this is a wave 3 that it still has a lot to fall, or if this is just a wave 1, 2, 3. All right, is this a completed wave 1, or will it break to expand the wave 3 to the downside? I think that's the most important for the moment, right? If it does push up, you can see that here is a left shoulder, here's a head, and here's the right shoulder for a potential head and shoulders reversal chart pattern. That's why that weekly pivot point is another reason why that could be a strong resistance spot. All right, otherwise, today's daily candle could be good info too, because if it closes below the 21 EMA daily zone here, the 21 EMA zone on the daily chart, that could be a breakout as well to think about. In that case, if today gets a break and it closes somewhere in here, of course, we'll have a bearish daily candle. Tomorrow, we might see a bear flag like this, and then a break and continue towards the S2. All right, so something like that could be interesting for myself to trade probably tomorrow. All right, but if it does break today, there could be still some space left as well. Not sure if it will get necessarily to the weekly S2 right away today, but it could later this week, I think, if it does break below the S1. If there's a bullish candle here at the end of this candle or next candle, then there could be a retracement first before, as I said, before we get that downside. What if? Well, if it breaks above this top, of course, it's not bearish anymore. That would be an invalidation level for this. What I expect is the start of a wave 5 here after completing wave 4. All right, that's it for now. Check out that free guide, the fib and wave relationships there. Very interesting. Wish you all great trading and talk to you soon. Cheers.